Hello traders, welcome back to my channel. In this video I'm going to be sharing with you guys how to use the smart money concepts known as order blocks and change of character, a very accurate entry technique where you can use to catch very good number of pips trading the market. So basically this is a change of character situation where price has changed character and pull back to another block. So in these situations we usually tend to take our trades and we can end up having very high risk to reward ratio trades. All right, so basically we are going to be talking about this in this video, and I'll be sharing with you guys how to trade using this particular confirmation techniques where you can trade and then catch very good average high risk to reward ratio trades in the market, trading the forex market or whatever type of market you are. So we are going to understanding how to use this change of entry technique or change of character entry technique, how to identify and trade order block. And under smart money concepts we are going to look at liquidity, imbalance, inducement. Okay, this is just to highlight this few concepts, is just to highlight how you should be able to enter using these techniques, guys. So just follow attentively. Okay traders, welcome to my channel.
I am Full Kingsley. By the grace of God, I bring to you guys strategies, tutorials on the forex market, volatility indices, metals like gold, Nasdaq, VIX75, many other instruments. You want to subscribe to the channel by hitting on the subscribe button and notification bell to not miss out.
Right, so in a market structure where we have either price creating lower lows or lower highs, right? Let's say in a downtrending market, right, price will usually move down, sometimes pull back, move down, right, sometimes consolidate, create demand zone, move down with long candlesticks, right? So these candlesticks, price will tend to leave behind what we call an order block. It will leave an order block here, okay, it will leave an order block here. This is the big time frame. So now we want to wait for price to pull back for us to be entering. The reason behind this is because the banks has executed their trades and we have what very strong bearish momentum. So that's why you usually see very big candlesticks with very huge bodies. So this is a situation where we call imbalance, right? Price leaves an imbalance where you are seeing a candlestick with a very big body. So in this time the banks will always want price to pull back to this zone for them to take the remaining orders, because they will usually take a few orders and they'll always wait for pullback price to come back to this zone, right, so that they can sell at a higher price. That's the law of demand and supply, right? But in this time we are also waiting to be selling. So but when price pull back to this zone, we can use what we call the change of character confirmation. Now this is the daily. Let's say this is the daily time frame or the H4 time frame. Once price has pulled back to this our zone, we are not going to enter immediately. Now the change of character confirmation entry comes in. Now we go to a smaller time frame. Now in a smaller time frame, maybe the 5 minutes, we are going to wait for price, because while price was pulling back in a smaller time frame, you will see something like this. Price will be creating series of higher highs and higher lows until it gets to this zone. Now when it gets to this zone, for us to confirm that this zone is going to hold, because sometimes the zone might not hold, price might break up, for us to confirm, remember this is now in a smaller time frame. We have already identified in the bigger time frame that this zone is our key point of interest. So in a smaller time frame we have what this is what is happening. Price is creating an uptrend in a smaller time frame. This is this swing. So it's this particular swing that creates this. So this is what we see in the H4, and this is what we see in the 5 minutes or in a 15 minute or in a smaller time frame. This is what we see. So what we want to confirm to see if this zone will hold is for price to come back and break our previous low. Now in this point in time, we have this zone here. This is our previous low at this point in time, because it's the zone that led to this high that actually hit the zone. So at this point in time we are simply going to wait for price to break. If price does not break this, it means that it does not hold. Sometimes price will just violate this zone in the bigger time frame. So our smaller time frame is to ensure that we have a break of structure, or what we call a change of character. So if price happens now to come back and break through this low, we call this change of character. At this point in time, price breaks through this low, it means it has violated, that is in a smaller time frame, so it has violated this zone. So we are going to wait for price to pull back, and then we mark the next order block, and then we short in a smaller time frame. That's what will happen in a smaller time frame, right? So in a bigger time frame we have this, in a smaller time frame we have this. That's what I'm going to demonstrate. Now if you look at this, you are going to see that we had a very strong downtrending market here on GJ. So if you look at it very well, look at those candlesticks that I'm talking about. We have these imbalances, right? Now talking about imbalance is simply a situation where a candlestick body formed with huge momentum, leaving behind space. So the candlestick that was formed before and after the candlestick does not touch. So their wicks does not touch. Like for instance, here you cannot see an imbalance because this wick has touched the wick of this other candle and all of that. So we don't pay attention to this. We only pay attention to this. So we have imbalance here. We have imbalance between the body of this candle. We have imbalance here. So now, what is an order block? Coming back to our definitions, now we are looking at order block. Order block is a situation where the candlestick that was formed before the big candles, right, we consider it to be an order block, right? Look at this small candlestick here, because that's what I was explaining. Because this down move here just created this small consolidation in smaller time frame, then we next drop. So price is coming back now to retest this zone. So this is what we have in a bigger time frame. Sorry, this is what we have in a bigger time frame. So we are going to be expecting price to pull back. So what we do now is we wait for price to come back to that zone. Okay, so this is actually too fast. Let's replay. Okay, when price come back to this zone now, we are not just going to sell immediately. We know that this is our order block. Remember that we mark this order block because it is the first candle that was formed before this strong bearish momentum. It does not matter the color of the candle, but it's a very small candle consolidation before this bearish momentum. So here it shows that this is the area where the banks initially place their sell trade. So they want to move price back to this zone to take their remaining trades, just like what we demonstrated here. This is the consolidation that we had. We had strong bearish momentum. Price has pulled back to this zone. So this is where they are going to take their remaining trades. But now we don't want to enter aggressively. So this is a situation where we don't want to enter aggressively by just selling. We want to go now to a smaller time frame where we are going to look for what change of character. Now we drop now to maybe a 15 minutes time frame. All right, so this is what we have in our 15 minutes time frame. Remember what I explained to you guys. Now this is the zone that we have marked here. Okay, and if you look at it very well, you are going to see that price is actually creating series of little higher highs before it got to this zone. This is what we demonstrated here. This is what we had in the 15 minutes. This is what we have in a day, in the bigger time frame. So we want to wait for what a change of character. Now let's go back to our charts here. Okay, now in this situation here, we have this. Look at this. So at this point in time, price is creating what higher highs and higher lows, higher highs and higher lows, higher highs. And then what happened now in this situation? We don't want to sell. Remember, this is our H4 point of interest that we marked out. Remember, these are H4 points of interest that we mark out. So we want to confirm that should we actually be selling. So at this point, we will have to wait for price to come back and break below. So price needs to come and break below the previous low that led to that high. Remember, in our demonstration, this is the low that led to this high here. Okay, this low led to this high, and this low led to this high, and this high is the one that actually touched our point of interest. So we want to see if price will come back and break below. If price does not break below this zone, then we will not be selling, right? Even though we have our bigger time frame confirmation, this is the demonstration here. Remember, as this low led to this high that created this zone, we want to ensure that price come back and break through this previous low before we should be marking our next zone to enter. So wait for pullback to enter if it breaks. So at this point in time, what do? We play out and then we wait to see. Okay, price came, got rejected, isn't it? Price came, got rejected here, but finally broke out. So when it breaks out of the zone, what happened? Now we want to be selling. We don't sell immediately. Now we call this change of character. Character has changed. Price has broke through the previous low that we had. So we consider this to be what? A change of character. So let's mark it out. Change of character, because price has actually broken through this previous low. So let's just move this. Okay, so price has changed character by breaking through this previous low. Remember, this is our H4 zone. Let me go back to the H4. I want to make my explanation so explicit. I always want to explain well so that everyone should understand. We are going back to the H4 time frame to show you guys again that this was the order block that we identified. So remember, we want to be selling at the order block. But now if you go back to the 5 minutes time frame, what are we looking for? We want to look for a change of character. It's just a confirmation, guys. Remember, there are other people who enter aggressively. They might just want to sell as soon as price gets to the order block, but we don't want to sell like that. We want to wait for what? Change of character. Now we mark what? An order block. Okay, we mark an order block that's from the next order block, because at this point in time, what is going to happen next is that price is going to start creating series of lower lows. Now price is going to create a series of lower low, and they will start consequently moving down. So at this point in time, because it has changed character, what we do now, we mark our order block. So this order block, remember, order block is the candle that was formed before the strong bearish move. So you see this strong bearish move here, it has left behind an imbalance. If you look above here, you see another order block here. So this is an order block that has been created, the first candle that was formed before that strong bearish move. Okay, the next candle, this is another one that was formed before the next bearish move. So at this point in time, another concept comes in. We call this concept inducement. That's why we say we are going to look at this is inducement. We have looked at what an imbalance is. Now we will look at inducement and liquidity. Now let me tell you guys what happened. This is a little bit advanced. Right now, at this point in time, many traders will looking to be selling here. Normally we want to be selling here. All right, so this is just kind of inducement for people to think that, okay, this is the best zone to sell, but this is the best order block because it is the one that is furthest from price. So you induce many people to selling and then you stop them out. Right, so just forget about that if you find it difficult to understand yet. But now the concept is this: we have had a change of character. So the next thing we do is we mark out our the best order block that we have here, and then we look at what liquidity. Now if you look at it, you see that we have equal highs that have been created. Now equal highs means that many traders will be selling in smaller time frames. So at this point in time, we have liquidity line above here because there will be stop losses of many retail traders that will be going to be selling. So at this point in time, this is a liquidity pole zone, right? And when this happens before an order block, we are going to be selling, right? So at this point in time, since we have had change of character, we are going to sell as price pulls back there. We have another confirmation liquidity that's lying above this zone here. That's why you usually see, we usually mark it out. And then what happened? We are going to be selling. So we will placing our short order here as price pull back to this zone here. Remember, we did not enter aggressively. We wanted to look for these particular confirmations before we take our trade. So when you take your trade like this, you can place your first target at this previous low here. You place maybe the next target somewhere at this zone here, right? So that is how we enter. So let's see. Okay, this is the order block here that price has gone and executed. Remember, we have had change of character and order block. So now we enter and then we see how price plays out. Okay, so basically let's extend this. Okay, so you see okay, so basically that's where we currently have price now. Okay, but I hope you understand the concept. The concept now was we did not want to enter immediately at the order block, but we wanted to wait for confirmation. So we have our first target hit here, and then we're expecting to get our second target hit here. So basically that is what we call change of character confirmation. Now what was it? We go to a bigger time frame like the H4, for instance, or the daily. What you do is you mark out your order block. This is the order block that we had to identify in our daily. So in this order block, once we mark out this order block here, what happened? We go to a 5-minute or a 15-minute. You can drop 2 10 frames below, and then what happened? You look for your previous low, because price will be creating series of higher highs, right? So when price is creating series of higher highs, what expect? You expect that as it creates a higher high and higher low, look at the latest high that was created before the move. So you wait for price to break below. When price break below, it shows that there have been a change of character. But if price does not break below this low, we are not going to sell. So when it breaks below, you identify the order block that is above there now in a sell aspect. So what happened? You wait for price to pull back and then you take your sell trade. That's basically the concept of change of character. So guys, I'm going to be bringing to you more videos. Make sure you watch the video over and over if you have not yet understood the concept clearly, so that you can understand. All right, so thank you so much for watching. If you found this video helpful, give me a thumbs up. Make sure you subscribe to this channel by hitting on the subscribe button and notification bell. See you in the next video.